Having a perfect credit score can provide you with many benefits. Those benefits include getting a competitive interest rate on home loans and auto loans. By getting a favorable rate on your loan, you can save thousands of dollars in interest payments on your loan. That is why having a perfect or excellent credit score is important. By the way, I checked my credit score recently and it's 812, and I have been maintaining my credit score above 800 for quite a while now. Today, we're going over how to achieve a perfect credit score, and that shouldn't cost you anything provided you follow the strategies that I'm going to mention shortly. These are the proven strategies that work. If you're interested in learning more about how to achieve a perfect credit score, drop a like down below and also subscribe to my channel if you haven't done it. And thank you for your support, and now let's get started. If you want to improve your credit score to 800 and above, then you need to understand how credit system works. Think of it as a class you took in college where your grade of that class is graded on various factors such as homework and projects, exams, attendance, and so on. Those factors weigh differently on the overall grade of that class. Your credit score works the same way, and it is graded on 5 different factors. Each factor plays a role in judging whether you are a trustworthy borrower or a risky borrower. So let's break it down. You've got payment history for 35% of the credit score, amounts owed or credit utilization for 30% of the credit score, length of credit history with 15% of the credit score, and credit mix for 10%, and new credit for another 10%. Now we know the grading scale of the credit score and how each factor affects differently toward your credit score, so we're going to go over how each factor works so that you can understand what you can do to improve your credit score. The most important factor in your credit score is the payment history, and that makes up a whopping 35% of your credit score. This factor can make or break your credit score. It's because lenders want to know whether you are the type of person who is always on top of your bills or whether you are falling behind your bills. If you have missed a payment in the past, don't worry, you're not alone and it's not end of the world. The good news is you can still improve your credit score by maintaining the payment history by consistently paying your credit card bills on time and in full. By paying your credit card bills on time every billing cycle, you have secured that 35% of the credit score on your side. And of course, sometimes life gets in the way and it is difficult for you to pay the full statement balance because of an emergency shows up, and at that time try to pay at least more than the minimum payment so that you can keep that payment history consistent and keep it current so that you are still paying your credit card bills on time, but for the remaining portion, you will be paying interest on your balance. I can't stress you enough the importance of paying your bills on time because payment history accounts for 35% of your credit score, and missing a payment can actually lower your credit score by a ton of points. For me, I would recommend you to pay your full statement balance by the deadline so that you're not only meeting the payment history requirement, but also you are gaining the system. What I mean is, by paying full statement balance, you are not paying any interest charges, any single dime to the credit card companies, and at the same time, you are also reaping credit card reward points or miles through your purchases, and that you can use those points or miles on statement credit or travel redemptions in the near future, and that is a free perfect bonus by using your credit cards responsibly. Another factor that affects your credit score is the amounts owed or the credit utilization that accounts for 30% of your credit score. This refers to how much of your available credit you are actually using. Imagine you have a credit card with a $1,000 credit limit and you are using $900 on that card. That's 90% credit utilization, and that is a big red flag to the lenders. The ratio between the credit amount you're using versus the overall available credit limit on your credit card is the credit utilization or the utilization ratio. And it's also one of the key factors in determining your credit score. It's recommended that you need to keep your credit utilization lower than 30% of your available credit limit. That means if you have $1,000 credit limit on your credit card, then you should never spend over $300 on that card. If you can get your credit usage to lower than 20% or 10%, that's even better, and that's gonna boost your credit score by a ton. The reason is simple. The lenders like to see that you are not maxing out your credit cards, By doing so, you're showing your lenders that you are financially responsible. Think about this. If you were a lender, would you rather lend money to people who are paying their bills on time and who are being financially responsible, or to a group of people who are not paying their bills on time and who are always maxing out their credit cards and always behind their bills? I guess the answer is simple, right? And that is why you need to keep your credit utilization as low as possible. If you pay your credit card statement by the due date and your balance is still over 30% of the credit limit, then I would recommend you to pay off some of that credit card balance so that it can go lower than 30% of the available credit limit, and that can boost your credit score. But that doesn't mean you need to pay down your credit card balance to zero. That is not necessary, and you might want to report some of the credit that you are using to the credit bureau so you still have some percentage of utilization on your credit report. Maybe 5% or 3%, then 0%. Another factor that affects your credit score is the age of credit. The longer credit history you have, the better it is for the lenders. And this credit history accounts for 15% of your credit score. While it might seem like you're stuck with whatever credit history you have, you can actually improve it over time. And also a good thing, there is a hack. You can actually improve your credit history. I'm gonna share that with you later in this video, so make sure you stay tuned for that. For example, if you have a credit card for 5 years, then you're better off than someone who just got their first credit card last year. And you might be wondering why. It's because lenders like to see a solid track record. So the longer you use your credit responsibly, the more trust you can build with the lenders. If you have your old credit card accounts, just keep them open. You might be tempted to close your old credit cards because you're not actually using them, but actually don't do it. The length of your credit history plays a big role, not just in determining your credit score, but also in other areas as well, such as when you're applying for home loan, auto loan, or if you are shopping for apartments to rent, then you actually need a good credit history and your good credit score. By closing out your oldest credit card, you are actually removing that credit history from your credit report. Let's say if you have an oldest credit card with 6 years of credit history and you just got your new credit card in this year, 2024, then when you remove the oldest credit card, then you remove that 6 years of credit history, and on your credit report, you will only have a couple months of credit history left from your newest credit card. And that could lower your credit score by double digits, but I cannot say for sure how many points it will lower your credit score. And that is why it is important to keep your credit card accounts open, not just your oldest credit card, but also other older credit cards if you have in your portfolio, even if they are collecting dust. If you have older credit cards that you no longer use, I would recommend you to keep them active, keep them current, and let them age. Over time, they will help improve your credit score. However, don't open new credit card accounts unless you really need them. Each credit card account you open lowers the average age of your credit history, and that can lower your credit score. Now let's move on to the types of credit you have. This makes up 10% of your overall credit score. Lenders like to see a mix of different types of credit, like credit cards, home loan, and auto loans. If all you have is credit cards, then your credit score might not be as good as someone who has a different mixture of credit types. By having a different mix of credit, you're showing your lenders that you can handle different types of credit responsibly and making you less risky. If you're just starting out, having a credit card or having multiple credit cards is fine. As you get older and when more opportunities arise and you're ready to take those opportunities, such as buying for a new home, at that time you will be applying for your home mortgage. That's when you start to branch out for the different credit types. That doesn't mean you should go out there and apply for a new auto loan so that you can have different credit mix. It's okay if you just have credit cards for now, and there are so many ways you can improve your credit score. Another factor that affects your credit score is the new credit, and that accounts for 10% of your overall credit score. So every time you apply for a new credit card, a home loan, or an auto loan, then it is considered as a hard inquiry and it is recorded on your credit report. A hard inquiry means the lender check your credit report to see if you are financially responsible, and that can lower your credit score. But don't worry about it. Hard inquiries stay on your credit report for only 2 years. If you're applying for a lot of credit cards in a short period of time, then you will have multiple inquiries on your credit report, and that can hurt your credit score. But if you're just applying for one credit card, then your credit score might dip a little, but it will go back up at some point. The key here is to apply for a new credit card when you only need it, and not because you are looking to rack up a bunch of credit cards. And remember, don't worry too much on hard inquiries. They are temporary and only stay on your credit report for 2 years. If your credit score isn't where you want it to be yet, don't stress out and don't worry, because it takes time and effort to build a good credit score. But there are some hacks that you need to know so that you can boost your credit score in a short time frame, let's say 3 to 6 months. So let's start off with the tip number 1, and that is paying your bills on time. Paying your bills on time is one of the simplest ways to raise your credit score. If you miss a payment on your credit card, then the credit card company will report it to the credit bureaus, and that missing payment will show up on your credit report and it will lower your credit score. So make sure you are paying your credit card bills on time, and if you're behind on your credit card bills, then try to catch up as fast as you can. It is an easy way to boost your credit score. The rule of using your credit cards is to pay off your full statement balance by the deadline every billing cycle. And if you cannot pay the full statement balance, at least try to pay the minimum balance or more than the minimum balance, so that you are maintaining the monthly payment history requirement that makes up 35% of your credit score. And the second tip on my list is to pay off your debt. Previously, we talked about the importance of credit utilization, and that is one of the key factors in calculating your credit score. The lower your credit utilization, the better on your credit score. Anything over 30% of your available credit limit can hurt your credit score. If you're using more than 30% of your available credit limit, I would recommend you to pay down some of those balance so that you can keep your credit utilization under 30%. If you want to boost your credit score to the next level, then I would recommend you to keep your credit utilization under 10% of your available credit limit. Coming up next on my list is to increase your available credit limit. Paying off debt is one way to improve your credit utilization, but you can also try to increase your credit limit. Most credit card companies have a form for credit limit requests on their website. From my personal experience, I've found calling the customer service on the back of the credit card works way better, and here's why. It's because I can talk to customer service in person, and at that time I can ask questions that I'm not clear. I can ask questions whether I'm eligible to apply for credit limit extension, and the most important question that you should ask to your customer service is that, is the credit limit extension a hard inquiry or a soft inquiry? That is the most important question you should be asking to the customer service before you apply for credit limit extension. Because if it is a hard inquiry, then they will pull your credit report and that will lower your credit score, and it is not worth it to lower your credit score just for the sake of extending your credit limit. And the reason I'm saying it is because I have extended credit limits on different credit cards and they were soft inquiry, and it did not hurt my credit score at all. Another hack you should be following is to keep your old credit card accounts open. It's true your credit utilization plays a huge role in your credit score, but so does the age of your credit. That is the average number of years you have had with each of your credit accounts. The longer your average age of credit, the better it is for your credit score. By keeping your old credit card accounts open, you are increasing your average age of credit history on your credit report. That helps you build trust. With a strong track record of credit history and your credit age, then it will be easier for you to get a competitive rate whenever you apply for a home loan or an auto loan. And the next tip I'm about to share is the gold mine. This is the moment that you have been waiting for. Previously, I mentioned that I'm going to share you how to increase your credit history. Now is the time. By using this tip alone can help you increase your credit score over double digits. And no, that is not by applying for a new credit card and not applying for travel credit cards or premium luxury credit cards, and it is by being an authorized user under someone's credit card. This is how the rich parents help build their child's credit at young age, and it is by adding their child's social security under their credit card, and the child becomes an authorized user of that parent's credit card. How it works is that the kids are piggybacking parents' good strong credit report on their credit report. So basically, without having a credit card by themselves at young age, when they are not even at 18, but they are eligible to build their own credit score. And that's an amazing opportunity, and that doesn't exist just for the rich family, but you can do it as well. Being an authorized user under someone's credit card is a game changer because one, it reduces your credit utilization. Once you become an authorized user on your parent's credit card, then you are also getting the parent's credit limit of that card on your credit report, and therefore it increases your overall available credit limit. Second, it boosts your credit age because you are getting the full credit of your parent's credit history on your credit report. And third, this is the best part, and it doesn't show up as a hard inquiry on your credit report. And this is because you are being added as an authorized user on your parent's credit card, and you literally didn't apply for a new credit card. The thing is, you have their credit report of that credit card on your credit report. So let's say if they are being consistent with their payment history on that credit card and also maintain that 30% utilization rate, then you will inherit that good credit history on your credit report. I can relate to this experience because I got added as an authorized user for one of my family members' credit card, and my credit history got boosted up to 19 years on one of the credit card report, and that increases the overall credit age of my credit report. And you can do that too. Find someone who you can trust, whether it's your parents, your dad, your mom, or your brother or your sister, someone who has a good credit history and a good credit score, and ask them if they can add you as an authorized user on one of their credit cards. And the last tip is to dispute errors on your credit report. According to the Federal Trade Commission's, 1 in 5 people have errors on their credit reports. That could mean a debt showing up on your credit report as delinquent, or even a debt that isn't even yours in the first place. Even though we're doing all the best we can, paying our credit card bills on time, paying off the full statement balance by the due date every billing cycle, there could be some cases where our credit score can drop due to wrong reporting from the credit card companies. If we see some irregular activities or items on our credit reports, then it is our responsibility to report to credit bureaus immediately. The sooner we report those errors on our credit report, then the faster our credit score can go back up. Your credit score is one of the most important aspects of your financial journey. It can be the determining factor when it comes to applying for a loan and getting a good competitive rate, or renting the apartment that you like. So if you haven't reached to the credit score that you want to be yet, then try to start taking action starting today. You can take small steps with the tips I just mentioned. If you follow those steps, you will be on your way to an 800 credit score sooner than later. Remember, it's about consistency. You don't need to make massive changes overnight. When you start taking action on improving your credit score, then you will see your credit score go up little by little. And before you know it, you will have a killer credit score that will open up many opportunities for you. So if you find this video helpful, drop a like down below. And if you found some gold mine out of this video, let me know in the comments below as well. And if you have some questions on improving your credit score, then feel free to comment down below and I will try to respond as fast as I can. And before you leave, make sure you subscribe my channel for more videos just like this. And check out my video on when to pay your credit card bill right here, and also check out my other finance videos right here. Thank you so much for watching and your support, and I'll see you in the next video.